Okay, so jump in. Just going to recap what we talked about last week. Black Friday, it seems like a long time ago. So this is what happened. We had a pretty disappointing sales figures, and we saw US stocks down. So a lot of tech stocks were a bit hit. Facebook, Apple, Yahoo, Google, Amazon, Alibaba, both were under pressure a bit after those disappointing sales. And then we had volatility returning last week as well. Saw some commodities bouncing up and down. So they did bounce back up on some oversold technicals. It's a bit of a continuation of the volatility story, which I will jump into later. And last week, Japan also in the headlines with a Moody's downgrade. So we'll be talking about Japan this week again. And China, quite a bit to talk about. Slowdown possibly, or more signs of a slowdown with the manufacturing PMIs and services PMIs, not very strong. We also had some talk of oil. And you guys can see a lot of themes still continuing into this week. So I'll just jump into what I'm going to start with Japan. So this week is going to be, I guess, the build-up to Sunday when we get the Japan elections, snap elections. So Shinzo Abe's been asking for a mandate on his Abenomics. Is everyone happy with what he's doing with devaluing the yen to push up stock prices and also restructuring the Japanese economy? So right now we're seeing Japanese stocks at a 7-year high, and we're seeing most indicators pointing, or most surveys pointing to Abe winning the elections. So yesterday we did get some GDP numbers, the final ones, that came out a bit worse than the preliminary data. So minus 1.9%, so technical recession worse than expected. So that also saw earlier in the week the dollar yen breaking 121.8. So traditionally, if or what we're expecting is if the elections go out as planned and Abe wins, we should see a bit of a push for Japanese stocks and the dollar yen to rise up more because of its reaffirmation of this yen weakening policy. So the possible risk that might kind of skew things is if the votes get a poor attendance numbers, which means people don't want to bother voting for Abenomics, or they abstain from wanting to show their confidence in the policies. So that might not have the as much of a strong impact on the dollar yen movement and the stock movements, even if Abe wins. So that's just one risk to look out for. But most signs pointing to, if Abe wins, dollar yen will continue to rise along with Japanese stocks. So judging from past experience, I think from past 11 elections, in the build-up to the elections, the Japanese stocks rise on average about 3%. So right now we are about 2.9%. So if you want to look at historical patterns, there might be a bit more upside towards the snap elections on Sunday. So that's on the radar. A lot of dollar yen action this week. And also a lot of commodities going to be in focus with a range of China data coming out. Tomorrow we have the consumer price index. Yesterday we had the export numbers. Friday we get industrial production numbers and retail sales. So all this is going to have a bit of movement on steel, copper prices, mining stocks in Australia, and pretty much a bit on oil as well. So this is going to be one of the factors driving commodities demand outlook. And next week, another swing factor will come from the housing price index. So if you've been following housing prices in China, they've been dropping since over maybe the past 2 years. just over the past 2 months, it's gone into negative, or it's shrunk. The index went into negative territory, so it indicates prices have been dropping overall. So this week or next week, we're going to watch out to see if it's going to drop for a third straight month, or maybe show some signs of stabilizing and turning around. So that's something to watch out for. Wednesday, we get US oil inventory prices. Based on last week's data, there was a bit of a surprise drop in US production. So that sent oil prices bouncing up a bit. So let's see if we get the same story this week or tomorrow to help oil prices bounce back a bit. But overall, fundamentally, oil story still unchanged. Weak demand outlook and huge supply glut. Another one to look out for would be gold. With a stronger dollar, typically it means pressure on gold prices. And then you have another factor with cheap oil. With cheaper oil, it means lower input costs, means lower inflationary possibility or pressures, and people buy gold to hedge against inflation. So no one's buying gold if there's no inflation or as much inflation. So that's two headwinds against gold. These two pictures still have not changed significantly. On the horizon, we still don't see it changing yet. So quite likely gold will remain under pressure. And if you look at the charts, you can see a bit of a downtrend from June when oil prices have been correcting to around 30% drop. So if you look at the downtrend line, it's being capped. So we did see a bit of a bounce over the last week with a bit of correction on dollar yen. So did see gold prices jumping up a bit, but you have to remember the fundamentals are not that supported yet. So that's where I'm looking at that short rally from this week earlier. So oil prices at a 5-year low at the moment, so it's still pushing lower. And that's hitting stocks like PetroChina. This is one stock I've been keeping a close eye on. It's quite, I guess, a good proxy for the oil price drop. You can see the two trend lines. Yeah, it's in a downward channel right now. So you can see also similar story around the last week's price. It jumped along with oil prices, but no real catalyst for it to jump back yet. And you can see it's under the green line, which is a 20-day moving average. So no momentum yet from this. It might possibly be a turning point if the oil prices or this PetroChina prices push above the green 20-day moving average and break out of the channel. But we're expecting the buyers to remain on the downside. So the higher possibility is for it to bounce off this resistance and go back down towards support. Right now it's about 850. So no real short-term catalyst for it to bounce back yet. So any possible short-term good news that might push oil prices up will help it possibly make it an attractive entry to go on to sell on the rally. And then the other indicator, this blue circle at the top shows the 50-day moving average crossing under the 200-day moving average. So that's one of the classic indicators of a bearish signal. It's called a death cross. And until this turns around with gray going above red, this is not likely to see any sustainable upward momentum yet. So this is one of the things to look out for if you're hoping to go long on PetroChina. You need PetroChina stock price to go above the green line and for gray to go above red if you're long on PetroChina. So there's some reasons to go long. Fundamentally, you're looking at PE ratios of 9.42. If you compare it to companies like Exxon, it's about 11.5. Chevron's about 9.82. So it's not too far away from the competition. What's interesting is the shift in its energy portfolio. It doesn't just do crude oil. It's also developing natural gas products. The upside for natural gas is China's going under some green reforms. So this will possibly mean more upside for the natural gas prices, which will help PetroChina's bottom line eventually. And then another thing interesting is its shale oil project, joint venture in Chongqing, 4.2 billion project. That will probably be a long-term play. So these are two things positive, at least for fundamentals in the long term. According to the Bloomberg ratings, you have 17 recommending buy, sell 6. So more on the buy side. Target price of 10.09. So if you're bullish on long-term prospects, that's what you're looking at according to a consensus forecast. Dividends quite respectable, about 4.78%. The other one has been quite popular with some of your review is Gilead Sciences. So I was taking a look at this. It's been relatively consolidating to some extent, but there's a strong support at $100. So any retracement towards this is quite attractive to go long. And you can see around the tail end of the chart, it's broken above the 20-day moving average, the green line, and above the 50-day moving average. So a bit of momentum building up to go higher. So let's take a look at the fundamentals. PE ratio is about 18.67. If you compare it to competitors like Biogen, that's 33. Celgene's PE ratio is about 54. And Pfizer, that's 17.2. So biopharma PE ratios is quite spread out. You've got from the likes of Pfizer 17.2 to Celgene 54. So it's very hard to look at PE ratios to judge its value. What I like to look at is the PEG, which is price earnings growth ratio, 0.53. So rule of thumb is under 1, it's undervalued. If it's over 1, means it's a bit expensive. That's the rule of thumb. So 0.53 makes it look quite attractive. If you look at something like Celgene, Celgene has a PEG of 1.24 and Pfizer has a PEG of 6.18. Of course, no dividends yet, but there's been some talk about dividends coming online in the next few years. A lot of analysts are bullish on Gilead Sciences, consensus 27, calling for buy. Oh, okay. Thanks, Lenny, for your feedback. All right, just jump into your feedback later. And holding for 5. Target price long-term 124.57. All right, look, Lenny, do you manage to get into the black with Gilead Sciences? So some of the long-term fundamentals, October is sort of a spike up because you got US approval to sell its Hep C drug. Quite a good support with Temasek as a stockholder, 0.84% stake. The other things driving it in the long term is cash flow. There's some estimates that free cash flow is going to come in at about $30 billion in the next 2 years. In the next 5 years, $80 billion. In the next 10 years, $150 billion. So where's all this money going into? So some people are expecting dividends. That's going to be good for stock prices. Acquisitions that might transform it into a more growth company might swing both ways. Or investments, when it goes into investments, it's very hard to judge how it affects stock prices. Some people might not like it, and you'll see some consolidation over the medium term. But overall, it's a market leader in its space, and it's got a good pipeline of products. So generally quite bullish on Gilead Sciences based on the fundamentals. And if you see from the long-term chart, it's on the long-term uptrend. So this might be something to look out for on retracement. And the other one I've been keeping an eye on is China A50. Futures has been jumping, has been having almost more than a week of positive sessions. So a lot of this has been driven by speculators. I'm sure if you've been following Chinese indices or Chinese stocks, a lot of them just rise for no reason or no fundamental reasons. And you can see such a quick run up. If you're a trend follower, this is something to jump on. Otherwise, it can get a bit risky if the bubble goes bust. So despite all the weak PMIs, the soft export numbers, you're getting all this run up with the expectations of stimulus measures from the Chinese government and central bank. So it looks like a lot of people are buying this on the rumor and then selling on the news. So when the stimulus measures do come out, this is likely to see some pullback. And speculation is quite, I guess, evident if you look at a Shanghai composite. There's the volatility came in at about a 4-year low, a 4-year high. Last week it was swinging up and down 3% within the same day. So a lot of speculators going to the market with the Chinese indices. So volatility, if you like, is something you can write on. And of course, I was talking about yesterday's Japanese figures, weaker than expected. China trade data, overall, it was disappointing. Export numbers weaker than previous month. Imports also were lower because of the oil prices. Trade balance numbers did improve a bit, but the takeaway is it's a bit negative. But it's still raised expectations for stimulus measures. Japan economy, consumer confidence overall is lower. And you can see German's economy not showing a lot of traction yet. There is some improvement year on year from previous month, but month on month there's a bit of a drop, and both numbers are below expectations. So still a bit sluggish, no strong signs yet. And today this morning we had Australians business confidence numbers. That came in at a reading of 1 versus the previous reading of 5. So that's negative and weighed down on the Aussie dollar. So there's a bit of a pullback this morning on the data. Later on in the afternoon, you have some European economy numbers with trade figures from France and Germany, UK manufacturing and industrial productions later in the afternoon as well. And happening over the course of this week, starting from today, is economic finance ministers meeting. So this could have some news flow impact. If they give any sound bites or any commentary to the media, it might swing the currency numbers, the currency movements. All right. And tomorrow we have more Aussie sentiment numbers in the morning. So far, Australian numbers haven't been very convincing, and there's been a lot of pressure on the Aussie dollar, and the central bank's been talking about how it's still overvalued with the commodity prices drifting lower. And what I'm looking out for tomorrow would be Japan's inflation indicators with the price producer index, as well as inflation indicators from China, consumer and producer prices. So looking at China's numbers, we're expecting it to decline slightly. US oil inventories is something to watch out for if you're into oil. Mentioned earlier last week, a surprise drop helped cut the supply outlook and push up oil prices. This week, consensus forecast is for those stockpiles to drop again. So let's see if it's a bigger drop than last week. So of course, if it actually rises, oil prices will drop down. And Thursday is going to be some data from Australia again, unemployment numbers. So Australian dollar has been going to be in action this week, and New Zealand is going to have its monetary policy statement, so Kiwi action also. What to watch out for in the afternoon is the European Central Bank's commentary on its long-term bonds sales. So we're going to see if that's disappointing or not. And then you also have its ECB's monthly report, where I'll give some commentary on the Eurozone economic outlook. And finally, at night on Thursday, quite busy, initial jobless claims and retail sales numbers. So this, if it comes in positive, will help the dollar yen go up higher. Based on last week's jobless data, it's been getting quite a lot of traction. So this week should build on that. And finally, on Friday, you have quite a bit of Chinese data, production numbers, retail sales. Those are expected to rise up slightly. And European employment expected to weaken slightly. So that will possibly mean the euro-dollar weakening. So that's the action for this week. Do any of you have any questions so far before I hand over to my colleague, Nabil? For China F50, how much more can it go up? All right, let's take a look at China F50's chart. It just broke through the 10,000 point level, so that's quite a significant. There was quite a significant resistance point. So if it stays above that, I think we can see momentum continuing. If it's above its daily moving averages. So that's something we can look at later. If I can get Nabil's help to look at the indicators on the indices. Generally, fundamentally, you expect it to go up with all the speculation on the stimulus measures. So the thing to look out for is central bank will announce its bank rate cuts. We're expecting a reserve requirement ratio cut before the end of the year. So that's what I was talking about, buying on the rumor and selling on the news. When that happens, we're going to see a bit of a pullback. So nobody knows when the central bank is going to make its announcement. That's the risk. So it was good if you bought it much earlier. If you try and buy into it now, it's getting into a bit of a high risk trade. Would you question from Ben, thanks. Would you dollar average your position in oil and gas or channel your funds into other sectors? Okay, the oil and gas one is going to be an interesting one to watch. Let's go to that chart. Okay. We're pushing 5 years lows. What's interesting is that a lot of hedge funds are starting to feel this is the bottom, and they've been going to more long positions. So net long versus net short from hedge funds has turned around over the past week. So that's, if you believe hedge funds, you're expecting a turnaround soon. So if you want to dollar average, that's something you should consider. Hedge funds are expecting a bounce soon. Based on fundamentals, based on some research commentary, most are expecting a floor of about $60. So personally, would I dollar average into oil and gas? I think it's very difficult to see it go beyond 60 at this point based on the current indicators. So that will not be good for dollar cost averaging unless because it's about to turn soon if you base it on what the hedge funds are forecasting. So I will probably look at more promising trades in other sectors. So the more obvious ones would be the dollar yen, the yen crosses, and Japanese stocks. So if you look at the Japanese index, if the ruling party holds on to its seats, right now the Nikkei is about 17, close to 18,000. The forecast for, at least from Nomura research, is for it to hit 19,000 if the ruling party holds on to its seats. So oil, the oil play is quite murky now. It's not as clear as maybe last month because you're hitting that $60 mark. And you're getting hedge funds getting out of that play. So I guess if you want to look at it, the smart money is moving. So where do you want to be? And any other questions from this for this week's macro events or what I covered from the charts? Okay, as usual, if you have any stocks you want me to look at, you can just drop me a note or let me know in the chat box. Okay, thanks everyone for your time.